Good evening, all. Ira Epstein in crazy Marketville. That's what I'll call it. And it is Wednesday, the 15th of March, 2023, about 6:45 p.m. Central Time. What a day. You know, we've been looking at all the U.S. banks that would have troubles, and now the contagion spread last night to the Swiss bank. And so we're seeing Credit Suisse get hit in a major way. It started off, I get up very early, obviously, 3:30 in the morning, and I'm watching Saudi interviews where they're not giving money to Credit Suisse. And I'm listening to the reason why they're not doing it. They own 9.8% of the bank, so they obviously liked their investment. And the Saudi head of the banking there said, well, if we go over 10%, then there's regulations. We've got to deal with them. We don't want to deal with them. We think we're fine with where we're at. And I went, uh-oh. Now, I didn't know the event would turn into what it did, but I knew the uh-oh, and we had that happen. And on that what the markets did is it picked up and said, the bank's not going to make it. I don't know the finances of the bank there. It got so bad during the day that you were watching our stock market down 600-700 points in the Dow, other markets down. But this could have been our washout event. It wouldn't surprise me. And in looking at how it happened, as the day went on, the markets wanted assurances. Well, lo and behold, the Swiss National Bank, their equivalent of their central bank, stepped in and acted as a backstop. And the problem for the moment has gone away. Gold slipping on that news. What's going to happen in Europe in currencies becomes a big issue tomorrow. Tomorrow's when the European Central Bank makes its monetary policy decision. And it's not an easy decision Ms. Lagarde has. Unfortunately for her, she cornered herself at the last meeting when she said she envisions 2 more interest rate hikes of 50 points each at the next upcoming meetings. Most central bankers don't corner themselves. She did. In the meantime, in all fairness, one of the biggest inflation components for Europe are energy prices. And if you take a look, you're down to $74 in Brent. U.S. oil is under 70. Now, Joe, you know who I'm talking about when I say Joe, right? With due respect, President Joe Biden. You promised you were going to start buying oil for our reserves in between $68 and $70. Trump would have never given it a range. And I'm not saying that's good or bad. I'm saying I don't like spilling my cards, but you said it. I expect as an American that you are in there and you are replenishing our strategic oil reserves and you are keeping your word. Why? Because they're there for the emergency. I don't care if we make money on it or we don't. It is there for our emergencies. And you took out a massive amount of it, rightly so, used it, got great value for it at $90, $85, $90 a barrel, and you gave a number. Stick to it. And America, make them stick to it. Got it? We need that oil back in. We don't have to not have it because, I forgot. I don't want to hear that. Okay. But now that it's down here, it's not 85, it's 74, she has some cover. Just the way that our Fed chair has the cover next Wednesday. A week from today, our boy speaks. We've got the Bank of England coming up. All the big ones are coming right at you now. And what are they going to do? The world situation has changed. Inflation has fallen across the globe to a degree. Ours is too sticky, way too sticky. Now, the CME group has what's called the Fed Watch page, FEDWATCH page. You might want to Google it and get into it. It shows you moment by moment what the bettors in the pits, I wish they were pits anymore, but the bettors, if you will, are sitting there and doing and where they're at. A week ago, we had a good chance, like 65% chance of getting a 50-point hike. Yesterday, that slipped to like 60, 58. Today it's flipped the other way. Now the market is saying we're not even getting a quarter point hike next week. This all changes all the time, but it gives you an idea the psychology of what is going on. Well, we'll see. I personally think that if the banking issue calms down in the next 7 days, we should go for the 25 basis points. It's not as though that's going to hurt the market. And inflation, by any standard, is sticky right now. Take a look at the shelter. It makes up 60% of our CPI. It has been sticky. You got to make your moves on it, in my opinion. All right. So when we come together and we look at the S&P, the market is staying underneath on a weekly basis, the 18-week average. That gives the market a negative bias. Everything that I do on charts is about filtering. I keep filtering until I find the trade. If one of the filters says no, I don't make the trade. The recommendation to clients, whatever it is, no, I don't do it. If they're all there, yes, why not do it? That's bearish. When I look at the market here, well, we've been coming down in legs on the market. The pattern is lower highs, lower lows. That is certainly bearish in the chart. And I told you an event was going to happen. I told you that the 18-day average of closes in red was going to get underneath both the 100 and the 200-day. It happened today. So now you have another bearish event, and if the market rallies, let's assume you get a nice pop, that should be the resistance point. There'll be a battle around that point. You don't just do this and it's forgotten. You go straight up again. I don't see that happening. Where's the support? It's here. The market's wearing itself out and keep hitting the lower Bollinger Band. You only close under it 5% of the time. What else can happen right now to make it go under it? I keep thinking, and stay under it. I'm not seeing the event. I mean, how many times are we going to discuss, oh, this other bank is weak, this one's weak, and take down the whole market with it? I've got my doubts. And we're not embedded. So for me, I think that the pros are coming out of their short positions. I think the public is the one pushing the shorts right now. By the way, before I get too far in this, I do these for you every day. Well, rain, sunshine, sickness. Do me a favor. If you like what I do, there's a like button here. Hit it. Give me the thumbs up. It helps us on the algorithms in YouTube. Okay. So now in this market, if you can get over 12,000, let me say it right, 12,494, let's call it. You get over that high, you're out of the problem. What else has happened? This market was in a downtrend, and we can come there and look at this together. Here we go. I teach this all in my charting courses. I think you'd agree with me, lower highs, lower lows, you're bearish. You're into the first major support, and I do think the pros cover when you hit a 200-day average that you haven't hit in a while. The problem is this cannot be called when you haven't hit it a while. You were already there. I don't think that's going to be the best support. I think the Bollinger Band and the 100 could be a better support. Doesn't mean you don't stop here, but you have an outside day. If you've taken the course, you know that that is the high you can't afford to violate for a certain period of time. Otherwise, it's a continuation pattern. In the continuation pattern, you start down, and now you got them. The odds favor you're going to make a run at these numbers. Now, what does a pro do? Gone. The opportunity. The trade is over. And I know you're going to tell me that the news is such, Ira, you don't get it. I'm going to be selling this market and looking for something else. And I'd be there saying to you, how many banks are in the NASDAQ? I said it to you here. Go look at the other day when I said that. So there's none. You caught a move in this index that was pulled along, didn't have any risk with that. Is it throwing out a buy signal? No. In the Dow, bing, you don't have the 200-day average showing here. Lower highs, lower lows, but I'm going to keep repeating. You're not embedded, and you're down to the Bollinger Band. You can run it for a while. Oversold money doesn't typically attract more money to it. Embedded money does. You get a chart embedded, you start attracting the money, and when it loses, you get the pop in the market, losing the embedded reading. In the Russell, you embedded. So if there's a chart that I am going to recommend selling, As long as you have your embedded reading, which you have it, look at this. You close, you can't go by tonight, but yesterday, which is Wednesday, we're on Wednesday, but you know what I'm saying, we're in the Thursday trade. Both numbers under 20, under 20, under 20. So for those of you that wanted to know embedded, that's it. Now, until that's lost, what happens is on the pops in the market, and there's a way that I teach you in a certain way that you know the number way ahead of time. It's there. I think the pros will sell that. If you get the reading over 21, out they go. If they sell it in this area and it's still embedded, bang, they'll be looking for the next break. It's different on that one than the others because of the embedding. In the T-bond market, you got over the Bollinger Band, and you haven't really gone anywhere since this one day where you got over it. You're drifting higher. But remember what I just said. This action is making the value of the securities worth more. As the interest yield is falling, the security value is coming up. And if they had to go to the discount window or the new window, they're going to get more money, not less money for that same security. Same in the 10-year note, and you're overbought. I don't think the pros are buying any more this year. In the dollar, you went from the lower bands right into all this resistance. The market finished its downside. That does not mean it's bullish. It's got a lower low, higher high. Here's the crazy market. You went from the upper Bollinger Band to the lower Bollinger Band in one day in a broad swipe. Look at the size of this range. You want to see something? Take a look at this. 108.22 to 105.80. That's 240 points. You don't get 240 point moves in one day on charts. That's the biggest I can recall in recent times. I don't know when the bigger one was. So as far as I'm concerned, yeah, I know it missed the band by a few ticks, but it's in the zone. So as far as Ira is concerned, I'll talk third party, I can see why this market's coming back and the 100-day average is suddenly, yeah, it's the first time you really hit it. That's where the market's probably going to try to hold. And it's an unknown with what Miss Lagarde does now. If she goes up the 50 points, is that bullish or bearish? We're talking, is our Fed through and they are going to then be raising their rates? It becomes worth a little more typically. In addition, while it fell off the Credit Suisse issue and others, the inflation story there in the Eurozone is vastly improved at the expense of oil. Let's applaud it. That helps. In the British pound, now the Bank of England's caught in its game. There is no trend here. You've gone from the lower Bollinger Band and in 4 days to the upper band. And now you're back to center stage doing nothing. A hard one to call. What are they going to do? So every central banker over the next 1 week, they're going to have a big problem. How do they address what just happened? A lot of them would like to stop raising rates. You don't want to break the economies. That's important. So keep your eye on that. We saw our PPI come out, and it looked to me like it was wobbling. That's a good story. Mr. Powell's got his hands full, but he doesn't have to make a decision until a week from today. Time is everything. What'd you do in Bitcoin? Lower Bollinger Band and 100-day average. Shorts out. You hit yesterday, 2 days ago, the top. What should you have done? Bye-bye. If you take the course on it, you learn these things, and you'll say, well, I can see you do it here, Ira, I learned it. No, you didn't. No, you didn't. You couldn't make that call on your own. And if it's doing that and it's embedded, where do you enter to get to those numbers? No, you didn't learn it. In the Brent versus WTI, okay, as long as you stay under the 18-day average of closes, you have a bearish bias. Now, these markets have extended themselves. Is it a breakout situation? Not completely. You didn't close at the bottom quadrant of each day. So shortly, I'm going to look for the markets to get back into the inside of that. If they embed, I get even more bearish. If they don't embed, it's a washout, game over, and we look for the market to restructure. I already can hear myself saying, what are the Saudis saying to themselves as prices just went down dramatically? And they are on the phones going, do you think maybe we should cut some production? Now, according to the IEA, Russia lost $2.7 billion in revenue. They still made plenty. They made $11 billion plus in revenue, but monies that they lost that they could have had because of the falling prices, because of less production, and they have to discount their oil so heavily, and that was from the month of February, I believe. So I was reading that story today. Good. Let them get hurt. Lower highs, lower lows. You see the slow stochastic oversold. I'll let my enemy own the short side of that. And in gasoline, now you took out that low. I was fearful that we might, if energy prices got hit the way they did. I didn't see that coming, though. Okay, it has to restructure. Has the time frame of driving in spring and summer gone away? No. Did I tell you to come into the market there? No. That's a guarantee. Did I tell traders to come out up there? Yes. Am I telling traders to not be short under the Bollinger Band? Yes. And last, the Nat Gas was my friend today. Didn't catch it here, but if you get my Spider ETF in the morning, it was a good trade and not embedded. Bye-bye. See you later, an alligator, another time. But that brings us to seeing these morning videos, because at 5:30 in the morning, the 5:15 and 5:30, I'm recording the futures one. Typically, I want it out in your hand by 6 o'clock in the morning, Central Time. Now, before all the big reports come out, you know what I'm thinking. You've seen what's going on in Europe. I'm bringing you up to date. The chart patterns are there. We have a game plan that we get a chance to adjust, if you will, by looking at the Spider ETFs at 9 in the morning, because everything there is based on what the futures are doing anyways in TLT, USO, DIA, IWM. You know what I'm saying. The individual stocks, no, not at all. And by the way, I'm starting to like Apple. So you start looking at some of these things and you say, okay, what do you do? Join me. It's that simple. Just click up here. It'll take you to the research section. You can go to iraepstein.com to get it as well. And remember, give me that thumbs up, I hope. I'm Ira. You have a good day. See you in the morning.